Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is July 24th, 2025. I am Luna.
I am JPMorgan. Getting near those record highs, it's creating quite a buzz. So let's unpack what's really driving this optimism.
Yeah, it's been a remarkably strong session for U.S. stocks. The Dow Jones Industrial Average impressively rose 1.14%. It closed above 45,000, and the S&P 500 gained 0.78%, and Nasdaq added 0.61%. Even things like gold and Bitcoin, they're hovering near pretty significant levels themselves. So yeah, quite a positive picture for equities right now.
That really is a powerful start. So with numbers like that, what's the core catalyst? What's fueling this strength?
Well, if you look at the big picture, the main driver seems to be that big U.S.-Japan trade agreement. The U.S. agreed to cut those planned tariffs on Japanese imports way down to 15%.
I know, from the threatened 25%. That's quite a drop.
Exactly. And in return, Japan committed to a huge $550 billion investment. And this isn't just about the tariffs, It signals a kind of de-escalation in global trade tensions. That's a powerful confidence boost.
Right. You can see that ripple effect.
Absolutely. Japan's Nikkei index jump, U.S. stocks with trade exposure got a lift. We even saw treasury yields tick up a bit as investors felt maybe a bit more secure. And now there's some hope maybe for a similar deal with the EU.
Okay, so trade deals are definitely a big tailwind here. But, it's never quite that simple, is it?
Yeah.
There are usually some underlying concerns, even when the market's up. What about the U.S. housing data? Is that still weighing things down?
It's definitely a point of concern, yeah. June existing home sales actually fell 2.7% from May. That puts them at a 9-month low.
Ooh, 9 months.
Yeah. And that immediately hit real estate investment trusts, REITs, and home builder stocks. They dropped. The main pressure point is high mortgage rates. They're stubbornly sticking around 7%.
Which makes buying a home much tougher.
Exactly. And the knock-on effect could be a squeeze on banks' net interest margins, the profit they make from loans, if loan growth keeps slowing down.
That's a clear headwind then. Okay, so beyond the economic numbers, there's this other kind of unsettling factor floating around. Worries about the Federal Reserve's independence. How's that playing into things?
That's become a really significant discussion point, actually. There was a recent Reuters survey.
Oh, I saw that.
Right. It showed about 73% of economists are worried that political interference is actively threatening the Fed's independence. And this issue, combined with public pressure, it actually seemed to contribute to Treasury yields pulling back a bit. Financial stocks underperformed too.
Interesting. So it does have a tangible market impact.
It seems so. And the VIX, the so-called fear index, it actually ticked up slightly. It reflects that investor nervousness about, potential negative outcomes like unanchored inflation where expectations just spiral, or maybe even a loss of investor confidence long term.
Okay, so quite a mix. We've got trade optimism on one side, but then these housing worries and Fed independence concerns on the other.
Yeah.
Looking ahead then, what should investors really be keeping an eye on in the immediate future? What's coming up?
There are several really key events. First up is the Federal Reserve meeting at the end of July. The benchmark rate's at 4.25, 4.50% now. So any change in their tone, any hints about future rate cuts, that'll be watched very closely.
Crucial meeting. What else?
Then we get key economic data. The first estimate for Q2 U.S. GDP growth. And the core PCE price index for June, that's the Fed's preferred inflation measure. So very important.
Right, the PCE.
We'll also be watching employment and housing numbers, weekly jobless claims, the July jobs report, June new home sales. And of course, earnings season is, fully underway. Lots of big companies reporting results.
Sounds like a packed few weeks. A real financial obstacle course, you could say. So bottom line for our listener, how would you sum up the current market outlook and the key risks?
I'd say the market feels, cautiously optimistic right now. Maybe almost a Goldilocks scenario for stocks where conditions feel just right. It's definitely buoyed by the trade news and maybe hopes for a slightly more helpful Fed down the line. But vigilance is absolutely key here.
What are the main risks then?
Policy uncertainty is a big one. Will these trade truces hold? How will the Fed handle any political pressure? There's also the risk of an economic slowdown, especially if housing really keeps slumping, and just general market volatility potentially coming back, like that little VIX uptick hinted at. So for you, the investor diversification and really focusing on quality investments, that still seems like the prudent path.
That's a critical point. Staying informed, really understanding both the opportunities and the risks, it's just essential when markets move this fast. So maybe a final thought for you to chew on. How will this delicate balance, the trade optimism versus those concerns about the Fed and housing, How will that actually play out in the next few weeks? And maybe ask yourself, what specific data points will you be watching most closely to get a read on the market's next move? Remember, a balanced, informed approach is always the best bet for long-term success.
Enjoy the brief? Please like and subscribe. From equities and bonds to global risk sentiment, we deliver days key market moves, macro trends, and institutional flows in just 5 minutes. Live stream coming soon. Stay tuned.